Good morning and welcome back to Almus Market Mornings. Looking at the AI rally and the sell-offs that are happening, I remember the cartoons I used to watch as a kid. A coyote runs off the edge of a cliff and keeps sprinting in the air, perfectly fine, but the moment he looks down, he realizes and starts falling. Even with this AI rally, the fundamentals don't shift overnight. The only thing that's changed is too many people have noticed it's expensive at the same time, and that's the narrative that's seen in the headlines of major financial news terminals. Apart from tech, there's a good amount of dollar strength that's prevailing. Dollar index is almost at 100 and 150. Euro is at a cycle low against the dollar below 1.14, and precious metals are being sold. Rupee has seen some weakness in the past 2 3 days. Yesterday, it has weakened almost close to rupees 95. Good morning, JK. Good amount of dollar strength that's prevailing. What do you make out of this move in the rupee? Is it month-end related dollar buying that's emerged?
Good morning, Swaraj. Yes, a lot going on for the dollar. We'll come to that in a moment. Before that, the most focused thing in the market is whether the AI-led stock rally is seeing its, the end or at least a big pass is what the market is wondering. And definitely there are signs because in yesterday's trading, Korean market had fallen 10%, and Japanese market was nearly 4% down, and US market, particularly the Nasdaq, was down nearly 5% in two sessions. So, is this the end, or is this a pause? It depends on who you talk to. If I ask the fundamental guys who follow the sector closely, they say that there's still a lot of demand for chips, semiconductors, and storage spaces, which is not satiable easily, and that keeps a support for the companies. But if you ask the techies, they look at it from two perspectives. One is whether it is overstretched, and and whether there are any signs that it is reversing. Definitely, many indicators show that the rally is overstretched. They are, they are all in extremely overstretched conditions. But at the same time, for people who follow technicals, to come and sell, uh, it also has to see some signs, signals in the technical chart. So that is quite mixed now. In the short-term charts, they do so, but in the long-term charts, they're not showing any signs of a reversal. Finally, the positioning. The positioning could be quite extreme because there could have been many people who did not participate because they already saw it quite extended. But there are some sections, particularly speculative sections, have been quite heavily positioned. So I can compare this with gold silver rally, that got halted in February, late February this year, when everybody was still saying the fundamentals justify a further rally in gold and silver. It sharply reversed with a lot of pain because of the positioning in the market, and that sort of situation in AI, notwithstanding the fundamentals, could be on the cards. That is, maybe we are seeing some signs of that, and that is where all these movements are happening. And to add to that, yesterday, for the first time, I heard a government speaking about taxing unrealized profits in Korea. Although today they came and said that this will not be implemented so easily, they will talk to the stakeholders, etc. And hence the Korean markets have reversed by about 4% after falling 10% yesterday. But still, this shows how vulnerable the markets remain, even on some rumors. That is the impact of the positioning in the market. And of course, in Korea, we understand that a huge amount of position is highly leveraged. So these are all adding to this, turbulence. Yes, eventually, some position squaring would make the market little more saner. And unless there is a big change in the fundamentals of the sector, we do not expect a big fall in the market. Now, other markets obviously, get affected when a few markets fall in global. We are all globalized, so that is where the Indian market also took a hit of more than 1%. Although India never was part of the manic rally, AI-led rally, and so India has always been on the subdued side. correcting for more than 20 months now, and then not well away from the all-time high seen in 2024. So I think this is the impact of the globally linked markets, and of course, people do take profits whenever in all markets, whenever there is a sell-off in one market, and also India still, as I said, India still is not carrying a premium because of other sectors doing extremely well. So that is where the AI-led stock market rallies. We just have to wait and see whether this is further triggered by any negative news, or it just a small correction of 5 to 6%, as it happened earlier also. As for the dollar, a lot of things are going for the dollar. Dollar has been for the last 1 year sold, but not severely sold, but definitely gradually sold, based on structural factors, deficits, debt, and tariff issues, and all that. But now that probably is overridden by some sort of a fundamental development, short-term fundamental developments or cyclical developments, I would say. One trigger was, of course, the FOMC meeting, where dot plot indicated at least one rate hike this year, whereas analysts are looking at even two or even three rate hikes this year. That's one. That puts the yield advantage higher for the dollar compared to other currencies, gets an advantage. Now, apart from yield, if you look at US economy also, yesterday we had PMI surveys, preliminary, from all the regions. And if you look at the comparative numbers, both in manufacturing and services, US economy is doing much better than all others. And if you look at the yields, US nominal and real yields are higher than other markets as well. In Japan, it is deep in negative territory. Inflation somewhere closer to 2%, but the policy rate is at 1%. In Europe, the rate is at 2.15%. And it is seeing inflation near 3%. So that is also an advantage for the dollars. Of course, the safe haven buying of dollar also comes in whenever there is a market turbulence. So that's where the dollar strength is, sustaining. And we have broken some technical levels as well: 100.80, 101, and then 101.5. Euro broke the long held support at 1.14, adding momentum to this rally of the dollar as well. So I think it has some more steam to go, until some changes happen in the relative fundamentals. So it's of course a relief to see that dollar yen has not, at least for the policymakers there, it has not broken the 162 mark even without intervention, but it's also staying above 161.5, which means the market is not giving up on its upside targets. Now come to the Indian market. As I said, we also had the impact of the global turbulence. All this is happening despite oil price coming closer to the pre-war levels, and then government RBI measures getting in, to get in more capital flows, has been working. In the just 2 days past this week, we have had almost 2 billion of inflows, both for mainly for the bond market. And despite that, Rupee has retraced back to close to 95 levels, and 94.20, as I mentioned yesterday also, 94.20, there is a wall of resistance for the Rupee to gain further. And so there is scarf sentiment added to the demand that importers were putting in at lower levels, oil companies buying, and some sort of positioning also a little bit on the short side has got triggered. I wouldn't say dollar Rupee has been severely shorted by speculators, but definitely some sort of position adjustment on the higher side because of the various factors like US dollar strength, then the market turbulence, and maybe some EM currencies reverting to USD for its high yield also might have played in that factor. Yeah, but I think that said, the short-term view is that Rupee could weaken a little more, maybe 95 plus, 95.20, but then medium term, I think we have some more strength to be seen in the Rupee, particularly if the global markets settle down and we could see more flows. We just in the beginning of, or rather the end of the June, but we still have up to September by when the FCN related flows and other flows where the hedging is provided by RBI for the ECBs at a discounted rate. All these things are yet to come through in a big way. So I think potentially Rupee has more upside, but I think short-term factors cannot be ignored. That is where this technical correction is happening. I feel personally that this correction, if it comes to 95, 20, 30, would be a good opportunity for exporters to increase their hedges. Thank you.
Thank you, Jack. And yes, a lot of things going for the dollar, broad dollar, which has been sold in the last 1 year. It has remained range bound for a long time, and now finally it's begun to rise. Whether it's expectation of rate hikes by the Fed, uh, or if you look at the relative performance of the US economy, which is doing better than its peers, or whether you look at the positive real yields, all of it is working for the dollar, and that's what the theme we are finally seeing that has emerged. Overall, on the equity side, AI stocks have seen a beating. AI related, whatever is in the tech space. And the countries which have been doing pretty well, like South Korea, Taiwan, Japan, because of this entire AI narrative, those have also taken a hit. Korea, of course, because of the very interesting Korean government was planning to tax unrealized gains on stocks, though the government said it will not be implemented and stakeholders will be consulted. Korean markets saw a good amount of sell-off because of that particular factor as well. Uh, and we also got some beating because of this sentiment being worse off in risk. Indian headline index was down about 1%. Now things are really, it seems that it is working in our favor. Oil is better, it's near the pre-war levels, and inflows have also started to trickle, especially in debt. But Rupee has been unable to gain beyond 94.20, and we find ourselves closer to 95. And as JK mentioned, above 95, we have some good levels for exporters to re-enter and sell forward their future exports. That's it from us today. Thank you for listening. We will catch up tomorrow with a fresh round of updates.